Today is our last lesson in insurance, and we're going to tackle health insurance. You'll see that this one looks a little bit different. It was not included in our curriculum, and I have created this from a variety of sources, which I have cited during the presentation. Here's a question to think about, though. Do you play the lottery? Why? Why do you play the lottery, or why not? Or maybe your family. Do you have lottery players or people who actually refuse? How does the lottery work? What are the chances? What are the odds that you'll win? What are the odds that you'll win really big? And is insurance like the lottery at all? It's interesting to me the number of people who believe in those very, very, very infinitesimally small odds that they will win the lottery, but on the opposite, don't consider the fact that they will lose on some major health crisis for a comparable amount of money. They think their odds of winning the lottery are much greater than their odds of having some catastrophic high financial incident. In fact, you're much more likely to incur some major medical costs for yourself or your dependents as you grow older. Healthcare right now in the United States is complicated and very, very confusing. And if you pay attention, when you pay attention to politics, you'll see that it is a major issue coming forth in elections. This was one congressman's idea at the time of the process for Obamacare or the CARE initiative that has now been pretty much dismantled. But it was complicated, and any kind of healthcare financing is complicated. The interesting thing about the United States is that in terms of technology and advanced treatments, we are top in the world. People come here to study. However, in terms of how healthcare for our population goes, we are far from the best, and there are some rather undeveloped countries that do better in taking care of their people in terms of healthcare. So don't confuse the technology with healthcare. Don't confuse that with the accessibility of having healthcare available to people in a society. The rules are changing, and don't quote me as a source. What I have taken is information from this website and a couple others that I thought looked pretty trustworthy, but it changes practically daily. So when it comes time for you to make decisions about your health care, make sure that you are looking at accurate information. All right, what exactly is health insurance? Again, don't confuse it with health care. The service your doctor provides, the training they get, the functions in your hospital, that is health care. Health insurance, health care incurs costs. Those machines, those buildings, those people all need paid. Health insurance is a means by which you, the person who will use that care, is insured for high expenses. The thing just to remember about insurance is that somebody pays for it. It might be your employer, it might be other taxpayers, it might be yourself. And health insurance covers all kinds of medical care. The doctor, the emergency room, hospital stays, medications, even things sometimes that are not prescriptions. If you need to rent a hospital bed because somebody is recovering from a surgery at your house, that might be covered on your medical insurance. All right, do you really, really need it? You're young, you're healthy, your teenage brain says you're going to live forever. One of the things that changed, at one point, health insurance was tried to be mandatory because, like the lottery, the more people who pay into it, knowing that very few people are going to draw from it, it gave you more money to give to the winners, or in healthcare, the losers. However, that law has been rescinded, and it is no longer mandatory. A couple states have it be mandatory, but not Indiana, Kentucky, or Ohio. People make the decision to go without health insurance to avoid paying the premiums. Premiums in health insurance are like premiums for all insurance. It's what you pay. Um, Health insurance premiums tend to be very, very high. However, there's a risk. What happens if you don't have it? Well, here's an example. How many things do you think you could do with $2,000? If I had $2,000 in my pocket, I could come up with all sorts of fun things to do. As of 2018, $2,000 was the average cost for a person to go to the ER. The emergency room cannot refuse to treat people. So people who are not insured go to the emergency room for treatment. All right. If you are insured, you would have the option to go to an urgent care or go to your doctor. Chances are they could take care of you at a cost of $200. All right. So if I'm not insured and I have an issue and I go to the emergency room, I will be billed $2,000 that I may or may not be able to pay. However, if I'm insured, it's only a $200 bill at the doctor. And I've cited the source that I got that from. Okay, so maybe you think you do need to get insurance. How do you go about getting it? Well, hey, the good news is that right now you are covered under your parents' insurance until you're age 26, if in fact your parents have insurance. Bad news, rules can change. I don't know how long, nobody can predict how long this rule will be in effect. Chances are you would be grandfathered into it. Grandfathering means that even though the rule changes, it still applies to the people that are of that age. It just won't apply to the people that are growing into that age. Really bad news, age 26 comes quicker than you think. I look at my kids' friends, and plenty of them have had some really fun years being students and trying out different things. But then age 26 comes and they have to get a regular job at a company that offers insurance. Insurance is a big old alphabet soup of a lot of crazy acronyms. The good news is you don't have to remember these because by the time you are dealing with insurance, it will be different. We're just going to go through them quickly so that you recognize what they are. COBRA is the thing that you can apply for if you lose a job, if you quit or are fired or furloughed or laid off from a company who had been paying for your insurance. COBRA allows you to pay out of your own pocket at the company's rate and keep your insurance. It's a temporary solution until something else happens. There's a similar program, for example, if you are a college student or sometimes if you are working remotely, you might be able to sign up for a relatively low-cost insurance, health insurance, when you are participating in that activity. Most of us are insured through our employer plan. We talked about this when we talked about paychecks. This would be something when your benefits office at your employer would tell you what your options are. Generally, you have choices, and then what you choose, part of that cost will be deducted from your paycheck. The other part of the cost will be paid for by your employer. There are limitations. It may not apply to a part-time employee, and it may not apply your first day of work. You might have to stay there for a couple months before you are eligible for their insurance. So if you're not eligible for an employer insurance or you don't like it, then you're going to be looking for an individual policy. This is where things get really pricey. We still have a remnant of Obamacare, which is the healthcare insurance market, and this is services either through the federal government or your state government that helps you look at your insurance options. They give you people to help. If you are a small business and you want to provide insurance for your employees, this is where you can go. You will also find out here if you are eligible for some tax credits or some government-supported insurance. There is insurance for young children. You personally might be covered on this, or if you are a parent of a child and cannot afford insurance, the government will provide health insurance for children under 19 years old. And this is for people who cannot acquire insurance another way. So we do take care of our children. Medicaid is also for people, this is an aid type of insurance, so this doesn't apply to children, but this would apply to low-income adults or people with disabilities. The sister to this is Medicare, the same sort of thing, but for people who are elderly. So back to the question, do you really need health insurance? And it's the same as, do I need any kind of insurance? And remember that we talked about risks. So we can accept a risk and just say it might happen, and you can just be you can be willing to sell your car, your house, and cash in all your savings for a may or may not happen medical event. You can certainly avoid and reduce your risks with your health, with your lifestyle. The bulk of healthcare is on people who are older and have other somewhat avoidable conditions like obesity and diabetes. There are things that you can do to reduce and avoid your need for high-cost health care, or you can transfer the risk. You can share the risk with other people. And that's what insurance is all about, is sharing the risk. So like the lottery tickets, if you and I and all of our neighbors are all buying into this insurance, the one or two of us who need it will get the payout for high medical bills. What you most often will see will be a managed care plan. And what has happened is that a large group of people, it could be, likely it could be your employer, it might be your credit union, it might be your university, any institution that has a large group of people can pre-negotiate with providers. So basically, they have worked with local hospitals, doctors, um, pharmacists, drug companies to and the deal for those people is, so that your employer says, I will send you so many clients, and in addition for me sending you patients, you will give them a reduced price. So an HMO is the most restrictive and is also the one that you will pay the lowest deductible, or will pay the lowest premium on. So the HMO, you choose a primary care doctor from a list, and that person coordinates the rest of your care. A PPO is a little bit more flexible than an HMO, and you see the list of doctors and you can choose who you go to. The point of service is a higher premium, and you go to whomever you like and you pay them directly. The other two services, the insurance company will pay the provider. A point of service, you go, you pay, and then you submit paperwork and get reimbursed. An EPO is similar to a PPO, but a smaller network. Chances are, if your parents have their insurance through an employer, this is one of the kind of plans that you are on. Some newer ideas that are out there. You can, regardless of who your insurance is purchased through, individually or through some companies, you could obtain what's called a high deductible health plan. And this looks more like your auto insurance. You know, you think about, does your auto insurance pay for small things, your oil changes, your new tires? No, you're expected to do that as part of maintenance, and you're only buying insurance for something very traumatic that happens. So you can have a high deductible health plan that has lower premiums and a much higher deductible. So you may not reach the minimum on that unless you have had a hospital stay with surgery. So it wouldn't cover an ER visit or a specialist visit, would not cover your medications. In order to do that, you need to have a flexible savings account, a healthcare savings account. You can have a healthcare savings account with any insurance policy, but basically it's pre-tax money that you put aside. So when you have to pay out of your pocket, you can use this money and it's not considered part of your taxable income. The one that I like is one that I'm doing, and it's a concierge or a membership service. And this is information that comes straight from my doctor's office. So I pay not quite $3,000 annually, and I pay it by the month. And what happens is that the only people who see this group of doctors are the people who are members of their clinic. So my visits with the doctor are longer. I have less time to wait. Um, I have more people that I can call. I'm guaranteed same day or next day visit. And they can do a lot of things in there. They can refer me to a lot of lower priced options. Um, I can do things there that I might have to otherwise do at a clinic or an ER visit. And they have either in-house services for labs and prescription drugs, or they have relationships with people who can provide that at a lower cost. So new ideas that are out there. Again, there are all sorts of business models that um, both can counteract the high cost of healthcare, which turns into your high insurance cost to pay for healthcare. So here is your question to end this lesson. What happens, and again, not you, because you're probably on your parents' plan until you're 26, but what happens to that 26-year-old if they don't have health insurance? What are the risks? What could happen? What will likely happen? And if that young adult chooses not to pay for health insurance, what do you think they would spend that money on instead?